Good afternoon, ladies and gentlemen. While my colleagues on the panel are taking their designated slots, I'd just quickly like to introduce the topic of innovation. I'm very honoured to be here in this wonderful open process that the European Commission is doing. I congratulate you on this initiative, and I'm particularly honoured that I'm the only chair of a panel which doesn't come from the European Commission or from the European Parliament, but from the market side. So thank you for that. I actually come from the payments side. I used to work in innovations in many other industries, but now I find actually payments is the most innovative industry there is. If you look at all the fintechs going on, at the mobile, at what we will see with PSD2, I think this is probably one of the most exciting areas to be in. And incidentally, it is an area where we already have pan-European solutions, and we are probably already better than the US. So the Green Paper, quite rightly, I think, is a bit short on payments, and I think that's a wise decision because there have been quite a lot of regulations on payments in the past, and the industry has got quite a lot to be doing with the various things that have been issued. But there are various connections from that world to the other worlds. Some other industries use payments because, of course, payments and accounts are the basis for everything else. And we see some good examples, we see some bad examples. Some critical things are, for example, IBAN discrimination, where we see that some services are not offered because it's actually from another country. So I can't pay my electricity bill for my London flat from my German bank account. And there is geo-blocking, which is a topic that's also in the Green Paper, which I particularly find annoying when I'm watching a Netflix film and I come to Brussels and I can't finish watching the film because I'm in a different member state. Or not to mention that I have 3 Apple IDs because I want to download apps from my UK banking store and from my Dutch public transport and from my German various other services. So there are still areas where the digital single market doesn't work for innovations, and this is what we'd like to explore on this panel. Where do innovations work well and where not, and how can the regulator help us in this? So in order to moderate and stimulate this discussion, maybe we can start with the colleague from PayPal, just in the order of the program. Luke Ulbrich has a background in cards, I understand, and PayPal has been around for about 20 years, so he obviously represents the old economy.
Whoa. Easy on.
So what do you think about innovations in Europe?
I'll try not to take that personally. Good afternoon. Yes, indeed, I was about 17 years in the card industry in America, based here in Europe, though, for the last 15 years as well. I look after Europe, Middle East, Africa for payments for PayPal. I'd like to think that I can give some insights today from both the fin and the tech side of things. So, a lot of my team is based in San Jose, Silicon Valley. That's where all of our developers are. At the same time, I'm a member of the management board for the PayPal Europe Bank. So I'm based in Luxembourg, and that is where our license is based. But I think beyond that, it really, I think some of the insights that I and my friends at PayPal can share as we formulate policy really relates to the fact that we do business. We are the only bank offering payment accounts across the entire EU, 28 countries. In fact, all EEA 31 countries where we have customers. It's about 60 million active accounts that we manage. And so as a result, we get the insights from our own customers and from our merchants. There are about 4 million merchants in the EU as well that use PayPal to manage their payments, be it through the PayPal ecosystem or through card acquiring or bank transfers as well. So linking buyers and sellers across the EU. And interestingly also, over 28% last year of PayPal's business was cross-border in the EU. So we're living the cross-border business, we're living the digital engagement, and we're moving beyond that. And I think some of the areas that I would love to discuss a bit further as well is not just about innovation on technology, but actually innovation in how we do business as well, and just basic banking, because it's not just about some shiny new toy. I think we've seen a lot of great technologies that have just fallen flat over the years because they didn't have a proper consumer value proposition. And so a lot of what we're doing as well as PayPal here in Europe is about rethinking the business model and looking at how financial services are offered, leveraging the technology, actually torturing the technology to make it do what we want it to do, when, by identifying really, a proper business model that consumers and retailers want to use. And really, it's about trust. I've been listening all day around consumer trust, retailer trust, but particularly gaining that consumer trust. And it is about starting out small. And so we started out small with consumers. So we offer a payment account, funds in, funds out, but we've been moving on from that as well now. So we're now offering credit to both small and mid-sized enterprises as well as to consumers. We launched in the UK and we've only just launched in Germany. So we're able to offer deeper services. However, what we are finding is that there are still very much so local regulations, local regulators that want oversight and make it very difficult to actually do business cross-border. The e-money directive was fantastic. It allowed us a level playing field to be able to offer accounts, payment accounts, in any of the EU 28 countries. We don't have that for deposit taking, which is something we're looking at doing. Credit as well is still very much so, is not harmonized, and we could see benefits from that. So really, from our point of view, it is, let's get on with this and see what we can do. I love the idea of playing with all of you in a sandbox. I really enjoy that, because I think that's what it's going to take. I think if we spend the next 10 years trying to harmonize all of the tax law, I thought that was a great example of all of the different legal requirements that are in place for payments and for financial services. We're going to be here, until the cows come home. So I think being practical about it, setting our sights, let's say, small to begin with, and gradually building up for simple products, making sure the consumer is safe, but working together to actually achieve that, I think, is going to be critical. Final point, I was in Dublin at our operations centre. We have a few thousand staff who look after our customers, our 60 million customers here in the EU. And I brought my entire direct report team over, and I do this every 6 to 12 months to make sure that they're listening to the voice of the customer. So we literally sat, and I sat for over half a day, plugged into an operator, listening to consumer problems, questions, concerns, and it really, I have to say, it was probably half of the people on the phone, and this was middle of the day as well, I was working, but we're probably people that were older, and one guy called himself, this Italian, he said, I'm a silver surfer, but I'm not a very good surfer, yeah? And we helped him, and I listened in as the agent, walked him through the steps on how to move money from his account in Italy to one of his children's PayPal accounts in the UK. Just one example, but you could see the pain points, so that as my teams are building new functionality, we're listening to the voice of the consumer. So I'm going to keep my remarks short and leave it at that, but I look forward to opening the discussion and working further with you. Thank you.
Well, thank you, Luke. I think we can remember two things, torturing technology while playing in a sandbox. So, thank you very much. You obviously are one of the leading innovators and have been for many years, so please forgive my initial remark. Okay, next, according to the agenda, so if the lady will forgive, we will pass on to another man first. It's Michael Stefan, another German actually, so lay all your stereotypes to rest that Germans are very innovative. In fact, any German who has seen video identity, which can be done round the clock, and you can open a bank account and get a loan at any time of the day just by flashing your passport in front of a video camera, will have seen that there's actually lots going on in the German market. So what we'd like to hear from you is a little bit what your product is. I understand you're going to be solving this gentleman's problem in finding a better savings product. And I think it would also be interesting to hear how, given that some of the incumbents need to adhere to stacks of rule books just to do one country, how you manage to work across the whole of Europe without doing that, and say something about the level playing field there.
So, thank you very much. So my name is Stefan. I represent a company of which I'm the managing director and founder, which is called Raisin from Berlin. We are a fintech startup, and our business is what was described in the first intervention this morning. We help savers across Europe find the best savings products across borders. That means if, for example, you are a German saver, you do not like the offers in your national market, and you would like to have a product from, I don't know, Ireland, Bulgaria, Portugal, wherever it is, then we do that for you. And at the same time, what we also do is we help banks, which are in the local markets, connect with savers in other countries and help them onboard these savers. And we believe this is a very positive thing. So first of all, more choice for customers or consumers is always better than less choice. We also believe that there should not be, in this area of deposits, local markets, but it should be an integrated market, so that there's enough competition between participants. So to give you a perspective of, so we started 2 years ago, and we already manage close to 1 billion of euros for our customers. We've brokered 50,000 deposit accounts to other countries, 30,000 customers. We have 50 employees only, and we have venture capital financing from the US as well as from the UK. So it's gotten big quite quickly, this phenomenon. Now, why could this become so big so quickly? So my feeling is that the deposit market is really not working on the European level, like not at all. Interest rates are very different based on the country, and it's not that this is risk. It's risk is a part of it, but it's also the market is not functioning. So for example, rates on savings products in Spain are lower than in Germany, which is a bit counterintuitive. Or for example, Lithuania has much lower rates than France. So it's really a reflection of national regulation, of micro market structure, but not so much risk only that I wanted to get clear. Second thing is you would find very different product features which consumers might like in other markets. So for example, in Eastern European countries, you have the ability to terminate a term deposit earlier, so you do not have to wait for maturity. In Western European countries, this feature does not exist. You see different term structures, different other features, and we believe it's the right of the consumer to have the best of everything from every country. Now, why I'm very happy to be here, and we are very supportive to this green paper, is we have a lot of practical experience in helping banks go or provide services cross-border. So we've spoken to 200 banks in the last 3 years, all intending to go cross-border, and we've helped 20 banks actually exercise their right to provide services across borders on our platform. And the stories I want to tell is really very practical experiences of what happens in reality. So I very much can agree with Christo on European regulation. Without this, we would not exist. We like the passporting regime, we like PSD2, we like the harmonized deposit insurance scheme, we like the third AML directive. This is all very, very positive. Otherwise, to provide the service would not even be possible at all. But at the same time, there's many things that then happen in reality. So one example, and you need to remind me of the time a bit, maybe 3 minutes. So one example is, for example, how can you identify and onboard a customer remotely? There's rules about that, but in reality it does not work. So I think there's only a few markets where you can have this non-face-to-face customer identification. Even in Germany it doesn't work. So the only way it works is with a video chat, but that is legally speaking it's face-to-face because they see each other. There's heavy regulation on how this really works, but this is a big obstacle. Second big topic for us is licensing. So in practice, banks should be able to passport to every country. And it's a 3-month procedure, 2 months with the one regulator, 1 month with the other regulator. And it's your right as bank, if you're licensed, to go into another country. In reality, we see regulators really taking every opportunity to stop and prevent or delay this. One bank from Croatia, it took them more than a year just to get a passport to Germany. And it's not understandable why this is still happening, but we have this experience over and over again. Maybe last thing, this is a personal topic for our company. So we are a deposit broker. That means we help consumers, private individuals, connect to banks. So this is not banking business because we never hold funds, and the question is how is this regulated? And it really differs by country. So in Germany, this is license-free. So we could not apply for licenses. We would love to apply for a license, but we cannot because this is a license-free activity. In, let's say, Spain, you need a banking license to do this. In France, you need a brokerage license with substance requirements. So we now have a subsidiary in France to have been able to get that license. And the other problem is since we don't have a license in our home country, we cannot passport. So it's going to be very piecemealy and very, very difficult for us to roll out that business model. And there's maybe the last story, form requirements for this very simple product, written form requirements and contracts are very, very difficult to operate. The best anecdote, and then I will stop, is from the Slovak Republic. So to open a term deposit account, you need to print out 16 pages and sign it as like with your own signature. And they have a rule in the civil code which states how large the letters need to be in the contract, the font size. So if, for example, a consumer prints out with 90% zoom, then we say, sorry, you can't have the account, please send again these 16 pages. So it's, and there's many more anecdotes. So we love the European Union, we love the green paper, and I think there's many, many small hurdles and obstacles that, that this green paper could get rid of.
Okay, thank you very much. I think that's clarified also the question of why you don't need so many rule books, because you partially partner with banks and also because you don't need a license in some countries. But there are also some indications of how we can get better in Europe to make your business model more possible. Okay, finally we come to the lady. Apologies. Anna, you're from, absolutely, best to last, from the FCA. And of course the UK has a long history of being very much ahead in innovations. It was one of the first countries, if not the first country, to introduce ATMs. They now have faster payments, they have PayM, the fintech industry is famous, so the UK is obviously a hotbed of innovation. So how come cash is actually still increasing in the UK, Anna?
Yeah, I'm not sure I can answer that question. I'm sure there are many reasons for it. But I mean, I think it's either very gracious of my fellow panellists or maybe the FCA hasn't done anything wrong, that they didn't mention anything, any problems you've had in the UK. So thank you very much. It's very kind of you. I mean, as the UK regulator, we obviously care about market integrity. We care about getting the right protections in place for consumers, but we also do believe that that competition can really drive these things, and we also think innovation can be a really powerful driver for competition. So I think, in answer to the question, we think there's lots of opportunities as a regulator, but we obviously think that not all innovation is good. Some of it is exploitative, some of it is purely gimmick led and really doesn't change people's lives for the better. So I think that's the first point to make. And I think the second one is that, there are potential new risks that can be created out of innovation. That might be the integrity of the market, but it might also be that a new way of doing business, and I think I agree with you. FinTech for me is not just about having an amazing whizzy piece of technology. I think what the FinTech community are doing as well is thinking about different ways of delivering financial services. But in doing things differently, we do need to understand whether there are more risks to the consumers and to the users of the market. So I think it's a very balanced approach that we take at the FCA. But I head up the team called the Innovation Hub at the FCA. We get to be the optimists most of the time, which is quite nice for a regulator. It's not something we often get to do. And our role is really to try and enable innovation in the interests of consumers in the UK. And that's the mantra that my team has. We're a pretty small team. We're less than 2 years old. So we have quite a lot in common with a lot of the fintech companies that we actually deal with. So we do appreciate their position some of the time. I think one of the first things, before I go into what the Innovation Hub does, and we've already been speaking about sandboxes and sandpits, and maybe talk about our take on what we think that might be for a regulator, I just wanted to slightly take a bit of time to think about what innovation in the interests of consumers can be. I think it's quite an easy thing to say, but I think taking a step back and thinking about how this might benefit the markets that I think we all care about, we think it can deliver a more efficient value chain. And efficiency, I think, can drive better value for money. I think we've already spoken about transparency as well. I think that's a major concern we have as a regulator. There's the user experience element of it, and we find a lot of the millennials are very interested in something that feels good and works the way they want it to and does what they ask it to. It is really powerful, and the fintech community, I think, have really kind of taken that and run with it in comparison to some of the more traditional financial services institutes who, I tend to find, you've got to fit the product rather than the product fitting you. And then I think we've seen, certainly as a regulator, a great opportunity for access or financial inclusion or participation, whatever you want to call it, that really technology has a way, algorithms, machine learning, whatever you want to call it, of being able to deliver a service to individuals who maybe haven't been able to be served by traditional companies. And then one last thing, which we haven't really spoken about, which is risk management. Financial services institutes are massive. Risk management is not easy, and we've certainly seen some opportunities in fintech for firms to be able to do this easier. So that's kind of some of the things we think is innovation in the interests of consumers, and they're the kinds of companies that we deal with in the Innovation Hub. So what does the Innovation Hub do? Well, it mostly provides direct support to innovators, and they can be of any size. They can be firms who want to be regulated, they can be firms who are already regulated, or they can be firms who will never be regulated but actually want to work with financial services institutes. And I think, I think you are finding that a lot of the services that traditional financial institutions provide are often outsourced to third parties. We don't regulate them, but actually we have a big interest in them doing the right thing and understanding why the handbook, the FCA's handbook or the rules or regulations are as they are. So that's the main part of what we do as a business. We provide direct support to them. Where we're most successful or where we find most demand is for the firms who want to be regulated. So often the kind of tech guys who've never encountered financial services rules in their past. They've got a great idea. They want to do it in financial services, but what is MiFID? And we want to help them better understand regulation. For me, this is not about avoiding regulation. This is not about special treatment. This is about getting them up to speed so they know what the right thing to do is. But we also help them with putting together an authorization pack. There's been quite a lot of discussion about the pain of trying to get authorised, and we've really found a huge demand in the industry for just some quite free and frank help as to how to get yourself authorised. So that's been kind of the highest demand for the team. As I say, we are discerning. I like to think we're a discerning bunch anyway. We look at whether we think the innovation is in the interests of consumers, but we're also really we also want to deal with firms who take seriously the rules that are in place. These rules are there for a reason, market integrity, protecting consumers. So we want people to actually thought about it. Someone who comes to us and say, hey, I want to launch this tomorrow, can you just give me everything so I can tick that box and get moving? That's not the kind of firm that we're talking about here with the Innovation Hub. We want people who say, look, I've tried to look at MiFID and I literally have no idea. Are you sure this is in English? We'll kind of point them in the right direction, and once they maybe come a bit closer to us, we'll maybe move a bit closer to them. But we care about people taking this stuff seriously because it's important. So I don't want to. I don't want to say that this is just about, rules are difficult and firms shouldn't have to meet them. That's not what we're here to do. Just a couple of examples. I've got kind of payments guys here with me, so I think just a couple of examples that have really captured our imagination. Ultra short-term car insurance. You want to borrow your mum's or daughter's or friend's car. There's really nothing out there to help you do it. This firm has an app where you can take a photo of the car and get insured when you need it. Using big data for credit referencing. The traditional credit referencing agency system kind of really only works when you're well established in a country. This firm really wants to look at whether big data can help include people and help people participate in financial services that haven't before. And then there's obviously the use of distributed ledger technology, and that's a big area where for us as a regulator, it's great to actually talk to people at concept phase and really understand how this technology might work and what risks might be associated for that, and how we need to change our mindset as a regulator. So I just thought that might bring it to life for you. But the direct support's what we do mostly, but we have occasionally some reflective thought about the world and making it a better place. And one of the ideas that we are working with at the moment is the sandbox, and everyone's been talking about it. I think this is a tech firm terminology. It's certainly not a regulator one, that's for sure. So we are looking to set one up. The analogy that I like to use is the pharmaceutical industry. And it's really thinking about, can we create a control environment where new propositions can be tested in real life so we can see the outcomes, but in a way that makes it safe and people understand what they're doing. And one of those components may well be informed consent. So that's something we're working on. It's not launched yet. It'll be launched in the next couple of months. The way I say it is the weather's too cold to be playing in the sandbox now, so we'll wait until the weather gets a bit better. So that's just kind of some of the things that we do as a regulator. But I think a lot of it is more about approach than it is about rulemaking and changing of rules. It's actually about how you interact with the firms and how you explain the rules that we've all created. So.
Well, thank you, Anna. I think that's a really inspired, different way of looking at regulation. I mean, a lot of market players sometimes perceive a regulator as the chap with the stick behind them who will hit them if they don't adhere to the rules. But you are the lady who is trying to encourage them and help them and adhere to the rules and find their way through it. And that's a really interesting idea. Maybe, again, that might be a model that we can export from the UK into Europe. Thank you for that. Time to open up the discussion for the floor. There's a gentleman at the back who's raised his hand.
Yes, Martin Schmalzer again from the Confederation of Family Organizations. I have a question for PayPal. Well, two questions really, short ones. How do you justify the fact that your terms of service include take it or leave it conditions which allow you to use data such as IP address, device, email, and share it with third parties for marketing and advertising? And the second question is about the online payment war going on right now between various actors like PayPal, Amazon, Apple, Google. I mean, consumers in the end would just like to pay, to be able to pay for a service or a product with, regardless the payment system in use. But how can we achieve this without having a situation where either the winner takes it all and we end up having only one online payments operator, or have local monopolies, like guarded, like just using Amazon Pay service for Amazon, and then, maybe Apple Pay for Apple products and so forth? Thanks.
Okay. Two very good questions. I think on the first point, justifying our terms and conditions, we collect data that is necessary for risk management. It's in our customers' own best interest. And therefore, we use different information like IP address to see if a consumer has actually logged in from one location versus another, as well as any other pieces of data that are relevant. But it is always the minimum amount of data that is necessary. It is never actually used outside of PayPal, and certainly not for anything else other than risk management. I hope I understood that question correctly, but let me address the second one because you're nodding no. So on the second point, I don't think there's really a comparison, say, between Apple, Google. They don't manage accounts, they manage hardware. And so what you've got actually is really just a handset that has existing financial instruments like a bank's credit card, a bank's debit card, in, say, an Apple Pay device or a Google Android device. PayPal does not manage devices, it manages payment accounts. So really the way we look at it is it's comparing apples and oranges, really. We manage a consumer experience and we manage consumer accounts, very much so like any other PSP or bank for that matter as well. Hope that's clear.
The topic of this informed consent and accepting terms and conditions seems to be coming up several times, and maybe that is indeed a critical thing in the digital world. So if I just put a tick against I accept all T's and C's and I'm not quite sure what you've all accepted the Wi-Fi here probably by putting a tick next to the T and C. Who knows what the Commission is doing with your data? And you get that in every industry, right? It's not something not specific to the banking industry. You were mentioning that the font size needs to have a particular dimension for it to work. This is the final page of my tariff for mobile contracts. You won't be able to read this. I can't read it either, and I have it right in front of me. So this is something that really needs to be solved. How do we get informed user consent that still is practical? Because you cannot expect people to read. We all have complex products. So if anybody has some ideas on how to do that, I'm sure that would be very welcome. Either somebody from the panel on the accepting terms and conditions, or if anybody wants to raise a hand and challenge anyone on the panel. As gentlemen, they back there.
David Rees from Consumer Credit Association. Just on that very last point, there is, I think the supplier has to be committed to want to do it, but there is an organisation or a kind of kite mark system in the UK called the Clear English Campaign, and my trade association actually put its credit agreements through this. The whole point is to simplify the language so that it's easy to read and understand. So I just toss that in as a suggestion, as you asked.
Anybody else from the audience? I know it's in the afternoon, you've had a glass of wine, but...
Yeah, also a personal remark as a PayPal user. It is like I paid twice and I didn't select PayPal. It was the only way I could pay for this specific course, and somebody else selected PayPal. And then, since then, I'm receiving emails that I'm a customer. I don't consider myself a customer. I just want to pay someone else. And now, how does that work?
By the way, I feel the love. I just want to make sure if I understand the situation correctly. You were on the internet or you were on your mobile, you were looking to...
I needed to pay someone. A friend of mine got married in this specific case, and they wanted a present, and apparently they selected that the only way I could pay for the present was through PayPal. That's their choice.
Okay, so this would have been requesting money. So, yes, I understand. So they chose PayPal as a way to pay if you would like to give something to them. Maybe you don't want to give something to them. That could be one answer. To be quite honest, there is a request money. It's actually a service that merchants use quite frequently, small merchants, so that they can request, it's basically an invoice service, but you can also request money from someone in a P2P environment. The fact that you didn't really want to do that, you can just decline.
No, that was not my question. My question was, since then, I wanted to give them a present, because they're friends, of course. But then they selected a specific company to deal with. But from then on, I'm chased with emails, and I don't know how that came, because you wouldn't expect that. If I'm paying my mother something, and she has another bank account than I do, my mother's bank isn't chasing me either.
Yeah, I can't speak to the particulars of the situation, but yeah.
Maybe we can, since poor PayPal is getting a bit of a rap here, we can...
It's keeping me away.
We can widen the debate about innovation. In an earlier panel, it was mentioned that we actually want the Ubers of finance to settle down in Europe. I thought that was a very nice way of putting it. Because today we have most of the innovative financial services, quite honestly, coming from across the pond. How can we make that happen, that they settle not only in London, which is sort of Europe, but really... but really in Europe. So how do we get innovations to happen in Amsterdam, in Berlin, in Milan? Any thoughts?
I suppose quickly before we think about what we do in Europe, I think yes, the US is a big market, but they don't, I think, as we spoke in the previous session, benefit from some of the things that we have in the European market. I think probably more importantly is Asia, actually, and one of the things we do in the Innovation Hub is look at innovation outside of the UK to think about, one, what might be coming at us in the future, but also thinking about whether it would be good for the UK market, and I think the European market, if we try to make it easier for our fintech companies to grow outside of the UK and Europe, because a lot of these fintech companies are really only working in one vertical, I think as we were talking about earlier. So really for them, scale is not about broadening their horizons, and I think TransferWise made that point. They just want to give that offering to as many countries as possible. But I think for me, China, EY did a report recently, and there wasn't any country outside of the UK and Europe that was mentioned, and actually, China is probably most likely to take over, and then Singapore, Hong Kong, all have fairly aggressive policies in this area. So the threat is not just from the US.
So, I mean, from my perspective, and I think I agree with Christoph from TransferWise, Europe is not such a bad place to start a fintech company. It's a big market. The laws are relatively the same. There's qualified staff to hire. So it's even if you compare to the US, it's a very good place to start. There's only two areas where I would say this could have been a bit easier. So one of the big obstacles for us was finding enough talent, which can, especially on the IT side, to develop the product that we wanted to bring out to the market. And it was very difficult to find them in Germany or even within the European Union. So we tried to bring people from outside the European Union to work with us. These are highly paid jobs. But the process we had to go through to get them to Germany and to get them approved, very, very, very difficult. And sometimes we even failed. So this is a big, big burden to us to find and recruit people from outside the EU. Second topic is, and I think you're a very positive example on that respect, or the Innovations Hub. We find it difficult to interact with regulators. I can also understand them. On their agenda is not innovation, but is managing risks for a market. But it always takes a very long time to get responses from regulators. Very often it is not clear what the response is, even if you decipher it with lawyers, if it's a well-prepared question. Often you get something in writing, but what is then said orally is something different than what you get there. So this is difficult, very difficult to navigate for fintech, and I think it could be improved.
Maybe PayPal could say a little bit about that. Why did PayPal come up in the US, and how would one make sure that the next PayPal happens in Europe?
It's interesting. With the internet having been developed in the United States, that's naturally Stanford University, Silicon Valley. I studied in Boston, a lot of MIT and all of that. So as a result, internet, took off in the US. Security and therefore PayPal was needed, in particular for eBay. This was about 15 years ago, because consumers, buyers and sellers did not trust each other. And so in the financial environment, they needed a trust agent. And so a trust agent was developed at the time called PayPal to address that need. I still see that need today. In fact, I think a lot of what we've been discussing today addresses that. As far as developing further our propositions, for example, here in Europe, we've got teams in London, in Dublin, in Paris, in Milan, who are actually developing consumer propositions to actually ensure, as I was talking about, not just the technology, because it's a global, it's a global environment. You can get an engineer in India to do your development, but your idea, like free return shipping, that came out of Paris office, yeah? And it's been great. And so we then work with our engineers to achieve that. So it's not just, I guess, again, about saying, okay, let's create this kind of techie sort of environment. It's also about thinking differently and encouraging that. That's really where I think the difference is. Anyway, long answer to short question. Sorry.
Thank you. There's a lady in that direction.
Hi there, my name's Faith Reynolds. I'm from the Financial Services Consumer Panel, which advises the FCA on consumer interest and regulation. And I was interested in the point earlier about choice of payment methods. And for the consumer, to be honest, it doesn't really matter whether you're offering payments account or just a payment service. They don't understand the difference. And I guess it kind of made me think of this broader point of how do consumers assess the market to find the right product when the market is so complex, and the market's growing increasingly complex with innovation. And although innovation brings choice, at the moment, especially in the UK from research we've done, people can't make sense of the existing choice. And I think there's some technology coming online through open APIs which may be helpful in helping people select a product so they don't have to go through the process of doing their own analysis and assessment. But that then kind of leads me to the question about actually hidden quality information on products. For instance, research we did showed that consumers want to know things like what's the average waiting time on a telephone, how long will it take for me to get through to customer service, is the call centre in the UK or is it not? Somebody else was asking about, well, how good is the banking app, will it allow me to do this, that and the other? All information you can't get until you've got a service. So I guess the question for me is, in what way does innovation help people assess the market, and how can we bring to light hidden information that consumers really want access to?
From the audience, because this would be your last chance before we get everybody on the panel to give a final statement. There's a gentleman over there.
Chris Sinclair from IQ. Question for Anna in particular. I love the model you described, and as Michael said, we do seem to have an awful lot of regulators who are of the thou shalt not breed. Having somebody who's so hands-on is very encouraging. Two questions really, I suppose. One is, how does that articulate when you actually come across the thou shalt not divisions within the FCA? So, for example, if you were to have an innovative proposition which got involved in fund distribution or something which was handled by another area, how do you sort that one out without going to the sandbox? And the other one would be, depending on that answer, are there any lessons that we should be trying to bring to the attention of the European supervisory authorities? Because they don't exactly give the impression of being the most forward-thinking and open to innovation. And is there a message there that we need to work on if we are to take this anywhere seriously in the regulatory environment?
Okay, thank you for that. I think we need to stop the audience participation, I'm afraid, and I would ask the panel members just to give a final statement of maybe 1 or 2 minutes on addressing some of those points and maybe any summary of new things we've learned today. Anna, would you mind starting this time?
I mean, I think on the last question, I think when we set up the Innovation Hub, we didn't really know what the demand would be. We didn't really know what they wanted for us or whether we could really provide it for them. What we've realised in the 16 months is there is an insatiable appetite. A lot of it is actually quite simple, which I do think flags that the issues about how regulators deal with firms as a key issue. And that there's a real benefit for us as a regulator in getting involved at this early stage with the firm. I mean, in terms of working, because the FCA, a huge part of our job is to identify risks and to address them. In terms of getting people to think about what we might traditionally consider risks as an opportunity, we've had to do that through demonstrating some of the business models, and that's why I use examples when I speak, because I think they really speak to people. For me, a lot of what comes out of the fintech scene, sector, whatever you want to call it, is firms or individuals looking at problems in the market and actually thinking, I can make some money out of that. I can deliver something that would solve that problem. So in a sense, there is an alignment between us and them. Switching, Faith raised that earlier, making it easier for you to assess what's out there and what do I need. There's some great things that can be done with technology to achieve that. So I think it's about actually doing the practical work, being hands-on, and seeing what the value is and kind of communicating that. So yeah, we now have people across the FCA. We still want to look at risks. We still want to be the critical eye. Some of these innovations sound really easy, but behind it are very complex. So we want to be responsible in how we look at it. So we're not gung-ho, and we're not, it's fintech, it's great. What we bring to the table is our experience as a regulator of what might go wrong, and actually communicating that to the firm as well. So have you thought about safeguarding client assets? How would you do that? What if something goes wrong? These are important interventions that a regulator can play at a very early stage of a firm, rather than waiting until they're in the market and they have a big customer base. So I think there are some real benefits that our colleagues can see.
Thank you. Michael?
So maybe as a closing remark, I want to share a bit of what innovation in fintech really is or what is not. So I think, as many have said, it's not just the flashiest new app. The best user experience is very often solving very actual problems of very normal people. So for example, our average customer is not 22, is 57 years old. So these are pensioners and these are savers, and they want to have more return on their assets. So really very real world problems. It's not very risky what we do. It's connecting savers to banks. So this can be fintech, and this can be innovation. And the many other models I see out there are very similar in nature. They're trying to tackle everyday's problems of banking consumers. So with my closing remark, I really hope that many of the questions that the Green Paper poses will be answered and also will be put into legislation, because I believe that this Green Paper is a big chance to create a very exciting and integrated market for European consumers. So let's hope that a lot of these things will get implemented.
Thank you. So, just from...
I really liked the question related to consumers' choice and how we can help actually better explain to consumers the technology that's out there, but also the pitfalls of some of those offers. When I think about the comparison websites that kind of gained popularity, insurance, banking, a lot of those were abused as well. And I do see the need for it, certainly. Whether or not that's up to an individual firm, say PayPal, to do that, I really don't think so. But I think that as regulators, as politicians, a clear, kind of capability of getting across to consumers their rights, their liabilities as well, but then also their choices, I think makes a lot of sense at an EU level, or at least a member state level, to help consumers make the right choice, get a fair price for a fair service and a service that they need and want. So I definitely, I think that something as part of this effort should be addressed as well. So thank you.
Well, thank you very much. If I just wrap up with a personal highlight, if you'll allow. I think there were some topics that maybe we didn't solve, like the informed consent, which seems to be increasingly important, and I don't think anybody has an answer at the moment how to do that, how to agree to complex products with all the consequences that may entail in a formal way. Maybe a little bit language and trust marks can help, but I think some true innovation is needed there. Another common theme seems to be sort of identity, that we need to make sure that we know and trust the person we're doing business with, and the next panel will deal with that. I think that's going to be a major area where things will move. And the last topic where I think we maybe have made some progress, I don't know, is this topic of why are the innovations in the past happening in the US and Asia. You're absolutely right. I mean, India, for example, is really doing extraordinary things, and China and Japan. And how can we make that happen more in Europe? And maybe this idea of co-regulation, working with the regulator, and trying to make things happen together. Maybe that's a really inspired idea which we can take away from here. So thank you very much to you all. And oh yes, we even have an answer to this gentleman's savings problem.
May I make a small remark? I've been thinking about something. You were talking about India, Asia, and I was thinking about China. China had Hong Kong, which was a sort of your sandbox. Why wouldn't we create our own sandbox? We're on the spot here for the sandbox. Take Brussels as a European city, like the Vatican is for the Catholics. Then you've got a playground. Here you can create your own rules, you can test them, as the lady compared us with the pharmaceutical industry. You can do whatever you like, and all the ones who see profit and benefit in it can simply follow the system. They can't block you anymore. You can test things, and the others, if they see the good opportunity in it, they can join you.
I can see this topic of the regulatory sandbox is going to stimulate a lot of discussion. I will leave you to torture technology at your own leisure over the coffee break, and we'll close this session, and thank you all for your interest.